Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got a trade idea for you today, March 2nd, 2023. And let's see what's going on in the market. We've got some interesting movement in volatility. And by interesting, I mean we don't really have any movement in volatility. A little bit weird. Let's take a look right now. /VX is what I like to look at. That's the implied volatility or the futures on volatility. They give you the best indication of what's going on right now in the overall market and volatility. And you can see it's down 33 cents. Now, when you look at VIX, which a lot of people like to look at, myself included, but it's more tied to a specific expiration. That would be the expiration of those futures. I'm looking at /VX, which is the future that's going to be around for another month or so until it expires into VIX. All right, so /VX, volatility is down. It's been down for days, and the market typically, when volatility is lower, the market typically rallies, but we have not had the market rally at all. Tom has been talking a lot about how bonds have been very, very soft and kind of keeping a little bit of a lid on the market and making the market go a little bit softer. Now, if volatility is low, you know my option page that I like to go to, the high option volume here, is going to have a lot of stocks that do not have high IV rank. Again, I'm just clicking on the top to bottom here, and you'll see there's not a lot of names that we like to trade that don't have earnings, and I'm not going back into coin, although it is calling me from time to time. But I'm not going to do it because it took me to the woodshed. That's one stock this year that's going to have a win. Sometimes the stock wins. Coin for me is one of them. Doesn't have the markets that I like to see, meaning the markets are a little bit too wide in coin for me, even though they say 10, 15 cents wide. It seems like it's trading by appointment, and the stock just moves too fast for the implied volatility for me. Now, for you, you might like it. But I'm going to take a look at something that I closed on 228, and that's Apple. I had a delta neutral strangle on with a couple of rolls that turned out to be a little bit of a bullish trade in Apple. We were able to close it on the 28th when we got a little bit of an uptick. We were able to make a quick $1 or so from this podcast. When we made that trade, the stock was closer to $148 when we got out of that trade. Stock is now 144, and with a very high correlation to the overall market. Apple has a correlation of 0.84, the same as the Microsoft trade that we did a few days ago. So this is highly correlated to the overall market. IV rank of 20 is not great. I will say that right out front. Take a look at what's going on with volatility here down at the bottom. You can get this on your charting package too by just clicking on indicators and then look at, I'll do it for you so you can see it. If you click on indicators here, you'll notice I have IVR TW. It's right here in the list. You put that in there, and then you'll have this on the bottom. All you got to do is click add, and once you do, it'll be down here on the bottom. So that's just the implied volatility IVR, the rank implied volatility of Apple or any stock that you put into the charts there. All right, so I'm looking at Apple. Okay, volatility relatively low, so I'm going to have to go with a directional trade. I'm going to lean a little bit long in here too, only because Apple's come down $3 or $4 or so, with the market being a little bit weaker, and I'm leaning on volatility. I'm hoping volatility doesn't do me dirty. When volatility goes lower, the market usually goes higher. I think it's acting like a little bit of a coiled spring. We'll see what's happening with the overall market. But Apple has a high correlation of 0.84, so let's take a look at that. Now, again, I'm not going to, just because I think the market looks like a coiled spring, it's certainly not acting like that, right? Bonds are lower, like I just explained. Volatility, although it can't get out of its own way, historically has about an average of being 20 over the last 10 years or so, and it's right there at 2066. So it's not like it's extremely high or extremely low. It's probably close to average. So I'm going to do a omnidirectional trade, but I'm not going to use a ratio spread. This time I'm going to go into April with 50 days to go. Let's take a look at it. It's a three-legged spread. I'm going to do a Jade Lizard. I'm looking at selling the 50-55 call spread. Let's look at this as a standalone trade. Now, like just say you're bearish on Apple. This might be something I would look to do. Defined risk, collecting around 1/3 the width of the strikes. It gives you the short deltas that you want because you're bearish on the trade, and it has just about a 70% pop, 69% pop. So as a standalone trade, if you were bearish, this meets all our criteria. We love to collect 1/3 the width of the strikes. We love to have over a standard deviation in probability of profit. It does not use a lot of buying power. Obviously, it's the credit received versus the width of the strikes. $5 is the width of the strikes. The credit received minus the buying power equals $5. How am I going to make this a bullish trade? Well, I'm going to sell a naked put to this too, and I'm going to use around $2,800 on this. I got filled at $5.50 mid-price, although a little bit wide right now. It looks like it's around $5.55. So you can do a nickel or so better than me. I got filled when the stock was only down around 90 cents or so. So you can see this doesn't move that much, although it does have a 24 long delta. This is definitely a long delta trade because you have only risk to the downside. You have no risk to the upside. Remember, if you collect more than the width of the strikes here, that's $5, then at expiration, no matter where the stock goes to, the stock goes to 200, your put goes to 0, and your call spread is worth $5, and you make whatever credit over $5 you sell this spread for. I sold it for $5.50. You would make 50 cents. If you sold it at $5.60, you'd make 60 cents. So the question has to beg to ask, if you have a delta of 24, why not just sell an option, sell a put that has a 24 delta? That would be the 135 put. Now, your probability of success is going to be pretty close to the same thing. It's actually a little bit higher at 77%. Now, you can make whatever you sell this for. Let's just round and say it's $2.50. So you can make $2.50 and you have a 77% pop. The probability of profit that I showed you on my trade, if I go back to it, 50-55, has a probability of success of 73%. So they're very close. Let's just call them equal in probability of success, right? Okay, so what would make the difference? Why not sell just the naked put? It's one leg. You don't have to pay 3 commissions. You're using the same amount of buying power, a little bit less because you have that call spread in the overall trade. So why wouldn't you just do the naked put? It has the same amount of delta, 25. It's a bullish trade. It has almost the same amount of theta to it, just about $5 in theta decay. Well, the reason why I like the Jade Lizard, even though we've done the research for it and it shows the Jade Lizard outperforms the put, although it does only slightly, I like the idea of being able to have a little bit more room than just the $2.50 I could make. Remember, if the stock stays right in this range above 40 and below 50, you actually could make the full credit here of $5.50 or $5.60, whatever you sell this for. Now, how likely is that? Well, it's not real likely with a $13 expected move. Well, let's take a look here. Oh, sorry, only a $9, let's call it a $10 expected move here with the stock at 44. That brings us up to about 55. Now, what would happen if the stock goes up to 55 at expiration? This put would be 0, and this call spread would not be, well, if it was expiration, it would be $5. But if it was 2 weeks before expiration, because really we're looking to get out of this trade with 21 days, right? If it's 2 weeks before expiration, you might be able to pick yourself up maybe $3 on this overall trade, or $3.50 if volatility contracts. Are they fairly equal trades? Yes, they are. The 135 put naked against the 40, 150, 155 call spread is about the same. How would I defend this trade? Well, for me, if I'm able to use a little bit more buying power because I'm already using $2,800, I might move it down from the 50 call to the 145 call. I like when I have Jade Lizards. It makes it very easy for me to roll down the untested side because it really doesn't change my buying power that much. I'm already using it and I have it as one whole trade. So if this stock were to go down to, say, 144 to about 139 or so, it goes down about half of its expected move in a very short period of time. I would roll down the 150 call to the 145 and eventually roll it down to the 140 if I had to. For me to roll down the untested side on a Jade Lizard, it's a very, very easy process. I think it should be for you too. All right, one more trade I want to show you that I'm looking at. SI, we talked about it a little bit today on the show. Really got itself rocked. It opened at $6.80. It's trading $7.55 right now. I've got a lot of emails on how I would trade this. To answer those questions quickly, I definitely would go to the April options because I think it's probably going to have a little bit more weakness to it, although I think it's probably reached its exhausted its down move, but maybe it'll hang out here for the next 2 or 3 weeks. And then you've got earnings coming, and I'm thinking earnings possibly can bail out this stock, if you can believe it or not. I would probably look to sell the 7.5, 5 call spread. I'm working a 125 offer in here. I did not get filled yet. If the stock goes a little bit lower, I will get filled. That's basically a 50-50 shot with defined risk. It's a $2.50 wide spread. I'm collecting $1.25. I'm risking one to make one with basically a 50-50 probability of success. But I like this 230% implied volatility and almost $3.50 expected move. So I fully expect to make the full $1.25 or lose the $1.25 if I'm directionally wrong. That trade would be a bullish trade. All right, everybody. Thank you for listening to my podcast. Please like and subscribe to the podcast. Helps me keep the lights on here at Tasty Live. And also, please open, move, transfer an account to tastytrade.com and take advantage of some of the great promos that they have to offer. Plus, use the #1 platform in all the galaxy.